Hello and good evening, and thank you for joining us tonight for Home Buying 101 webinar. My name is Bridget Perkins. I'm the Assistant Manager at Valley Strong Credit Union, and I am joined this evening by Robin Potter, Director of the Home Loan Center, and Craig McMahon, Senior with McMahon Real Estate. Before we begin, I would like to cover some housekeeping items. We plan to answer a few questions from the audience. To submit a question, please click on the Q&A button on the bottom of your screen. We will answer as many questions as we can live, and if you feel your question has not been answered through presentation, please fill out the survey after the webinar and supply your contact information. At that time, someone will reach out to you directly to answer any of your questions. Some questions may be more appropriate to be discussed by an appointment, and if that's the case, we'll respond to you with Robin and/or Craig's information, and then we'll dismiss your question. So we have a lot of great information to cover tonight, so I'm going to turn my video off now so we can focus on the presentation, and I will begin by introducing our wonderful speakers tonight. All right. So tonight I want to introduce Robin Potter, who is our Director of the Home Loan Center here at Valley Strong Credit Union. Robin is originally from Southern California, however, has lived in Bakersfield for the past 38 years. She has been making home loans and helping people realize their dreams of home ownership for over the last 46 years. Robin and her husband, David, have 6 children, 8 grandchildren, who are all a big part of their lives. The second person I'd like to introduce is Craig. Craig is celebrating 28 years in the real estate business. He started in 2021, excuse me. He grew up in Bakersfield and attended local schools. Craig bought his first investment property at the age of 18 years old and got his real estate license shortly thereafter. Craig and his wife have 6 children that keep them very busy, and they are proud to call Bakersfield home. So, okay, with that being said, let's get started. Robin and Craig, let's go.
Hi, everybody. Hello, Craig.
Hey, Robin, how are you?
I'm doing really well. Thank you
Good.
all for joining us tonight. We're really happy that you could take a time out of your day to listen to and participate with the things that we're going to talk about. And I know it's been almost a year now, just wanted to make sure that you all know that we are Valley Strong Credit Union, and we are formerly Kern Schools Federal Credit Union. We still have all the same DNA, we have all the same services, we even have more services to offer nowadays. So now that we've got kind of all of our housekeeping done and all of that, we'll go ahead and move on into our webinar. So I wanted to go over some of our objectives tonight. One of the things that brought you here is that you're thinking about buying a home. Craig and I are going to talk about a lot of different things that are related to that. And Craig will talk about, well, both of us, we'll talk about why should I buy instead of renting? And what a lot of people don't understand, and maybe you do, is that buying a home and having that place to call your own is the largest financial asset that most people will ever have throughout their whole lifetime. And there's also benefits that you'll have through your income taxes as far as that goes. So we'll talk about, where do I start? We're going to talk about what is the process look like? Why do I need a pre-approval as opposed to a pre-qualification? What's the difference? What do they mean? We'll talk about that. What do I do to get pre-approved? What's involved? We're going to talk about, what do you look for when you're finding a realtor? What does a realtor do for me? And also, what the steps are that are involved when you're starting on that search to find your new home. We'll go through what making an offer to purchase looks like, and then closing escrow as far as that goes. So we'll just move on here. Okay, so there's a lot of talk everywhere. You hear about a pre-approval versus a pre-qualification or a pre-qualify. What's the difference? People use those terms interchangeably all the time. Well, there's actually a really big difference. And I'm going to ask Craig to kind of jump here in just a minute as I start explaining the differences here and how important these and well, really, as a realtor, what are the differences in them, and what does he think about that as far as that goes? So a pre-approval itself is an actual formal application. It's where you have met with Valley Strong Credit Union mortgage loan officer. In that meeting, you're going to supply your income, your assets. They're going to check your credit. You need to have your credit checked. Everything will be verified. They'll review down payment options with you, figure out what kind of a housing payment, what that fits in your budget, what does that equate to in a sales price as far as that goes, so that when you're out shopping for a home, you're working with your realtor, you know you're more focused and you know what you're walking into as far as that goes. And at the end of this pre-approval process, what ends up happening is that the credit union will give you a formal commitment stating how much you can borrow and the terms that we're committing to on the new financing for you. So, pardon me, oftentimes you'll hear about a pre-qualification. A pre-qualification is a much simpler process as far as that goes. It's a very, very informal meeting with the lender. The lender is basically just taking your word for this is what my income is, this is what my debts are. They don't check your credit. Nothing is verified, nothing at all. So, and it's a very, very rough estimate of your ability to complete an offer to purchase. So Craig, as a realtor, how do you feel about this when you know that someone has taken the steps, gone and met with their Valley Strong Credit Union loan officer, and they've had all of these things verified, or they've just talked to somebody on the phone and said, yeah, it's this, it's that, it's this, it's that, and they go, oh yeah, you're qualified. What are your thoughts on that?
You know, I get offers every single week from other real estate agents that, you know, some of them provide the pre-approval letters that we're looking for, where all of the information Robin spoke of has been verified and confirmed, where I also get quite a few that are just the pre-qualification letters that say that, you know, the approval is pending verification of employment, bank statements, credit score, basically everything that's needed to qualify for the loan. And I'm sure everyone that's part of this tonight knows somebody that has nothing but horror stories to tell about how many offers they've made and how they just can't seem to get one accepted, and how, you know, they just don't know what they're going to do and are ready to give up. And what I can tell you is they probably are out making offers with pre-qualification letters and not the pre-approval. And the most important thing that we're gonna learn tonight, or if anybody, you know, those of you taking notes, put a great big star by this pre-approval, because it is such a powerful tool in negotiation to get offers accepted. Robin and I have worked together for many, many years and often get people's offers on homes accepted, not because they're the highest offer, but because they have this approval letter intact. So I have agents all the time tell me, you know, Craig, you don't have the best offer, but you have the best qualified buyer, and we went with your offer. So very highly recommend going through this approval process, and your success and odds of getting your offers accepted will skyrocket in comparison to the pre-qualification.
Good deal. Thank you. Thank you very much. And just a little side note for you, for those of you that have tuned in tonight and have joined us, Valley Strong Credit Union has a preferred realtor base, and Craig McMahon is the preferred realtor of Valley Strong Credit Union. That's why he's here with us tonight and talking to us, because we value his expertise in what he does. We do a lot of business with him. And so, Craig, I just wanted to say thank you again for joining us.
I thank you. It's an amazing team there, from the processing all the way to closing, but it's a great great partnership.
Thank you. Okay, so a couple of things. Since we have been in our pandemic, my slide here talks about when I go meet with a Valley Strong loan officer, what do I need to do? What should I expect? Well, my little side note here is that currently we are not taking face-to-face applications. However, that doesn't mean we're not taking applications. What we are doing is doing telephone applications, and or you can apply on our website, and that would be called an internet application. But we monitor them very closely. And so I wanted you to understand that just because it is not a face-to-face application doesn't mean that things will take longer as far as that goes. So what are the things that you should be prepared with? What do you need to gather? Well, what we're looking for is proof of your income. And what that means is if you're a wage earner, if you're working, if you get a W-2 regular pay stub, we would be looking for your last 2 years W-2s and a copy of your most recent 30 days of pay stubs. If you're self-employed, we would be looking for your last 2 years filed federal tax returns. If you're retired, we would be looking for proof of your retirement income. It could be via the statement that you get monthly from your retirement. It could be maybe you just have your retirement income is just automatically deposited. We could look at your bank statements because that would show proof of the amount of income that's there. So the whole point of that is that as the loan officer is looking at it, they're going to determine what your qualifiable income is. And they'll walk through that with you and explain to you exactly what you're doing. If you're working 40 hours a week and you're making $15 an hour, then we use that base wage. We just figure that out and derive your monthly income from that. If you're self-employed or you're a seasonal agricultural worker, we will always take a 2-year average of what your last 2 years of income have been. If there is proof that your income has increased, we would ask for maybe a current pay stub that shows a higher rate of pay. If you're a seasonal worker, or if you're self-employed and your business has done much better since you filed your last 2 years of tax returns, then we would look for a year-to-date profit and loss statement so that we could see where your income, how your income is improving. We would also need to see your last 2 months of bank statements. The reason that we're looking for that is that we need to verify that you have adequate funds to close the transaction. Now, there are different ways that, and we'll talk about funding sources and down payments and things like that just coming up here. But when we prepare this pre-approval letter, it's something that we're certifying to, is that we have verified that you do have adequate funds to close the transaction, because that's important to the seller that you're making the offer to all the other parties that are involved in the transaction. One of the things that we'll do is we will do a credit check. We will ask for your birth date. We're going to need to know your social security number. We'll ask for your, and then we'll, and to get this credit check, we actually have to fill out the application. And so, pardon me. So anyway, once we fill out the application, as we're moving through, then your credit is checked. Then that is another form of verification that we're looking at. What we see on the credit report is we pull 3 different repositories or 3 different bureaus. We use TransUnion, Equifax, and why is the other one skipping my mind? I'm sorry, TransUnion, Equifax, and Experian, sorry. Anyway, so all 3 of those bureaus will report based on what their scoring model is. And when we're looking to figure out what your FICO score is, because you hear that all the time, get your FICO score, get your FICO score. In relation to a mortgage application, we take those 3 bureaus and we use each one of those bureaus reports their own score. We take the middle of the 3 scores. So let's just say one score was 787, one was 785, and one was 760. They very often they vary because they have, like I said, they all have their own scoring model. They don't tell us what that is. It's kind of a secret that's inherent to that industry. Anyway, so when I say we're going to take your middle score of those 3 that I listed, we would take I think I said 785 as the middle one. So that then becomes your representative score for your application. If there are 2 applicants, husband and wife, partners, it doesn't matter. If there are 2 applicants there, each one has their own FICO score that is based on the middle score that is from their credit reports that are run. And then the representative score for the application is the lower of those 2. Just want to make sure that we're clear on that so that everybody understands. The loan officer is going to go over what your down payment options are. And what that means is they're going to talk to you about the different kinds of programs that are out there. You'll look at different scenarios, and then they'll show you what is involved, how much money you're going to need to close a transaction, which kind of goes back to us looking at your bank statements. They'll talk to you about certain types of loans, what the different attributes are. Some have different down payment requirements than others do. And so they'll kind of walk you through all those different options for you. Then what they're going to do is ask you, and I've had this happen tons of times. I've had lots of people come to me over the years and say, Robin, just tell me what I'm qualified for. Tell me what I can buy. And I turn it around every single time and say, I need you to tell me what fits in your budget. Because we don't want to say, when I'm looking at things that are in black and white and on paper, I don't see all of the other things that are going on in your household. I don't know that your child is playing soccer, or maybe your contributions to your church. There's a myriad of things. There's just tons of other things that don't show on a credit report. So it's important that we define what's comfortable for you in a housing payment. And then we can start from there. What we can do is start figuring out what price range, based on these different kinds of loan programs that you've looked at, what is the best price range for you to be in? Because we don't want to get you started out there looking, and maybe you're looking at a $450,000 house, and that's the house of your dreams, but you haven't gone through these steps yet, so you don't realize that maybe that equates to a payment that does not fit in your budget. So we want to make sure that everything is cohesive with you going in. And what that does is it really helps relieve a lot of stress. So right now at this point, you already know that as you're meeting with the Valley Strong loan officer, you already know that Valley Strong is ready to stand behind you, so and be committed to you and make a loan to you. At that point, we will prepare a pre-approval letter for you, and that is something that you will give to your realtor that you're working with. And so,
if I could add to that, Robin, I think it's important that I get this question asked every time I come across, I get a phone call or someone's looking to look into financing, that they know that it's a non-commitment meeting. There's not a fee or anything charged up front for you to sit down with a loan officer to get these questions answered. Robin and I and the staff there at Valley Strong, we often, it can be months, 6 months, longer, up to a year. But what's nice is we're able to put a game plan together and tell people exactly what they have to do. If they can't buy today, if they pay off this credit card in 3 months, 6 months, whatever the time frame is where we need to get, whether it be the credit score or the income to debt ratio, we can put a plan together and tell you when you would qualify, when you would be able to do it. And again, it's important, I think, for people to know that there's not a upfront fee for that to to put that plan in place.
And thank you for bringing that up. And I'm just going to piggyback right on that, because if you're talking to another lender and they're asking you for money to go through this process, go somewhere else. Just go somewhere else, because there's absolutely no reason that they should be charging you for anything at this point. Thank you, Craig, for bringing that up. Appreciate it. Oh, did I go too fast already? A couple of things I want to talk about before I move on to the next screen. So one of the things that people seem to always have a lot of stress about, and I'm going to tell you, I've bought and sold my own homes over the year, and I know every step of the process that happens, I get nervous. I know what my credit score is. I know what my income is. I know how it's going to all be calculated out. I'm nervous. So I completely understand where you're coming from, but I wanted to just go over a few things and kind of debunk those myths of, when you're in this pre-approval meeting with your Valley Strong loan officer, you're going to know coming out of that meeting a couple of different things. Just like Craig said, maybe we're going to set up a game plan for you because maybe things just aren't lining up right. It could be your debt to income ratio. What is your debt to income ratio? What does that mean? Well, what we do is, as we're looking at and going through these steps, you guys can't see, my hands are moving all in the background here, sorry. You can't see me moving around. Anyway, as we go through these steps here, and we look at your bank statements, or we talk about how much money it's going to cost to close the transaction, we're going to be going through those things. Maybe you need to save some money. Maybe you're going to get a gift from somebody, but you need to secure where that gift is coming from. You might be needing to borrow from your 401k. There's lots of avenues that you can get your down payment in your closing costs. And also in this meeting, you will be given an estimate of what all of the costs in the transaction are going to be. It's not just about down payment. Excuse me. We're going to tell you everything that's involved, all the escrow, title fees, everything that's there, so that you can be the most prepared you can be going into this transaction. I'm going to go back to debt to income ratio. And that just plays a part in what from my side of the desk as a lender, we are assessing your ability to repay the loan. So we look at your income, we see where your income is, we figure out what your qualifiable income is, then we look at your debts. That's where the credit check comes in. We look at what's reported on your credit report, and then we take, once you've kind of figured out which is the best program to fit in your budget, what kind of a sales price range are you going to be in, at that point we're figuring out what a projected housing payment is going to be. So on the credit report, what we're seeing is your installment loans, we're seeing your credit card loans, we're seeing possible mortgages that you have. Pardon me. So we take all of those numbers and those monthly payments that you're making, and we add that to your projected new housing payment. So we're going to figure out what the amount is to pay the loan back just by itself. So that means principal and interest. And then we're going to look at the projected property taxes and projected or estimated homeowners insurance. And if you're buying a property that has a homeowners association, if it's a condo or a planned unit development, there are often association fees that are involved. We also have to include that. We add up all those together, and then we divide that into your qualifying income. So your qualifying income is technically going to be your gross income, or your income before taxes are taken out. And that number, and you guys can do the math at home, all of those numbers, and that's what we call your debt, cannot exceed 50% of your gross income. So if you're kind of trying to work into it backwards, and there's lots of different ways to do it, you can take your gross income, and gross, just like I said, just means before your taxes are taken out. You can take that and divide that by 2, that gives you that 50% figure. You can take out what your monthly bills are, and then right there, that tells you in a debt to income ratio what your new housing payment can be. So I kind of did it both ways there for you as far as that goes. Anyway, that's part of your ability to repay. We look at that. We look at your how long you've been on your job. We're looking for an income stream. We're looking for stability of income as far as that goes. If you have had several different jobs in the last couple of years that are in the same field, that's okay. That's just fine. But if you have had several different jobs in the last couple of years and have just been on your new job for 6 weeks and now you're making $5 or more an hour, we may have to wait a few more months to be able to see what your true income stream is going to be, and that you have some stability in that job, because maybe now you're doing a job and you're being trained on it, but it's not something that you've had in your past, and so you don't have experience. That's another thing that we're going to look at, is continuity or stability in your income as far as that goes. When we talk about down payment, one of the things I want to bring up to everybody is, and I know it sounds kind of funny, but we hear it all the time. Well, I have $10,000 in my safe at home, and so I have cash to use. Well, actually, in our times that we are in right now, especially with the Patriot Act and all of the rules and regulations that are here, cash is not an acceptable source of a down payment. So we will help you with finding alternative ways to maybe it can the funds can come in the form of a gift from a family member. There's lots of other alternatives there as far as that goes. So did I leave anything out, Craig?
I would like to add that one of the things that we do on my side of a real estate transaction, working with a buyer, is when we've been through this approval process and the lender is ready to write a letter. Tomorrow being Friday, Robin and the crew there at Valley Strong, it's a dreaded day for them, because I'm calling looking for lots of letters at different price points for my clients. If you qualify for $275 and the house that you want to make an offer on, you choose to make an offer of $250,000, we are not going to show the seller or the seller's realtor an approval letter for $275. We would have a letter written at the purchase price or the offered price of $250,000. So, we gotta keep our cards to ourselves when we're in the negotiation process, and that's something that we don't do. We don't let them know that there's a possibility of it, just and that you would be willing to spend more money. Just because you qualify for more doesn't mean that your family's budget can go there. So that's something I think is important for people to know, that once we find and identify a property, that the approval letter will match the offer that we submit.
Thank you, and thank you for bringing that up. And I'm actually, this is not untrue. It's what he's saying is exactly right. There have been sometimes with Craig's clients, our members, they might have 3 or 4 houses that they're going to make an offer on, and I'll write 3 or 4 different approval letters based on, so we always know where the top end is. We know how high you can go, because we've already gone through this process of establishing what's going to fit in your budget. And then, just like Craig said, we never want to tip your hand to anybody. So
no, I often get offers with approval letters, even that will say, it'll be a $250,000 purchase, and they'll show me a letter that they qualify for $325,000. And when you go to your sellers and you're talking about, and then they'll be asking you for closing costs. They want help with $2,000 in closing costs, and that kind of changes things, knowing that they qualify for more money in the negotiation process. So we want to, like I said, keep our hand to ourselves.
Yeah, that's right. And really, the contents of that approval letter basically states, it's our we're putting in writing to somebody who's viewing that letter. We are telling them that we have verified all of the information, all the things that I just talked to you about, and that there's an application for X number of dollars, which equates to, a certain sales price, and that we are committed to making the loan to you for that prospective property. The only other things that would be subject to or would be a condition of that is, as we go through the process, we're going to require, once your offer is accepted, we're going to require an appraisal on the property, because that validates to us in a couple of different ways. One, what the collateral for our loan is actually worth, and it also provides to us other information. It gives us attributes about your home, your prospective home that you're getting. It tells us if there are any health and safety issues there. Are there things that don't meet building code? Those are the kind of things that, as a lender, we need to make sure are taken care of, and so that the home that you're moving into is safe and meets minimum property standards for the building department for the county or the city, whatever jurisdiction you're purchasing in, as far as that goes.
If I could add to that, Robin, this is something else that comes up every single week, multiple times, is Zillow is not a source for real estate value. A lot of people, they see houses in neighborhoods, and they want to see on what Zillow shows. It's a very small window into what the market is truly doing. I mean, the market is changing on a daily basis, and so these appraisals are an absolute requirement to justify what that true market value is, because it's all over the place. Some parts of town, homes are selling for close to $200 a square foot, where others are selling for $125 to $130 a square foot. So there's a lot of variables that come into play, and having those appraisals done, is the utmost importance.
Thank you. And actually, what's coming up here, as I want to talk about what do you want to look for in a realtor, and then Craig's going to he's going to take the helm here and walk you through this. And some of the things that he's going to talk to you about is, as your realtor and your representative, and you're ready to make an offer on a home, he's going to, and I'm not going to give away too much because he says it a lot better than I do, but he's going to talk about how do you know that you're making the right offer on that house? And he's going to talk, and I'm just going to toss these words out there. He's going to talk about what is a comparative market analysis. The only reason I'm bringing that up right now is because that's actually what is done, what an appraiser does in their report to us. So we'll go ahead and move on here to the next screen, because Craig's got a lot of stuff to talk about tonight. So what should you look for? What should I look for when I'm looking for a realtor? What's important? First thing I want to talk to you about is you want somebody that has a lot of experience. We, prior to doing these Zoom webinars, Craig and I have done a lot of these home buying workshops. And one of the things that we, as we're interacting with our audience and we're talking about everybody, and I don't mean this in a negative way, but this is, like I said in the very beginning, this is going to be one of the biggest financial things you're ever going to do in your life. And you want to be in the best hands possible. You want to have somebody that is experienced, that has been in a lot of transactions. There's always hurdles in every one, if I'm not mistaken, Craig. Isn't there always some little like
There seems to be. That's
right. And so oftentimes we'll hear, well, hey, my Aunt Susie, her son Billy, he just got his real estate license, so let's give him a try. I don't mean any offense to your family members, but I can't stress the importance of, or how important it is that you actually use somebody who is experienced and really, really knows the ropes as far as that goes, especially with negotiation and a lot of other things, because there may be things that come up with the property, in your inspections, in disclosures, things like that. The realtor that you're talking to should also analyze your wants and your needs. They're going to ask you What's important to you? What's important to your family? Or if you don't have a family yet, what's going on in the future? Where are you know, what are your plans? And that'll help define maybe some of the neighborhoods that you want to live in. You may want to be in a certain school district as far as that goes. There also, this experienced realtor is going to be your champion and is going to negotiate on your behalf and in your best interest. That is something that you should always have, that feeling of that present feeling of that as you're speaking to your realtor. How much does it cost for you to have a realtor that's going to represent you as a buyer? Nothing. Anytime, and it's going to be just like I said about the pre-approvals. Anytime somebody says, oh, I'll go show you that house, but I need you to cut me a check for $500 because I'm going to be your realtor and I'm going to represent you, go somewhere else. Just like when you're in that pre-approval process, if they want to charge you money, go somewhere else. You do not pay for that realtor, for your realtor to represent you. Another thing that they're going to do is they're going to coordinate. There's in the transaction itself, your realtor is going to coordinate with all the different parties that are involved. They're talking to the lender, they're talking to escrow, they're talking to the other realtor, they're oftentimes talking to the appraiser, coordinating if there's any work requirements that have to be done. There's a lot of things, a lot of moving pieces that they're basically in charge of and handling and on top of. They're going to review all of the paperwork, which Craig's going to talk about all the paperwork that's involved. There's a ton there. And then the other thing that they're going to do is monitor deadlines. They're going to monitor the not only just the close of escrow, but there's oftentimes, I'll get questions from Craig. Well, did you draw this disclosure? Because he knows that that's going to set the timeline for us to sign, for you to be able to sign loan docs, and just kind of keeping everything going in the right direction. The greatest thing about having an experienced realtor is that they're going to be able to solve just about any problems that are coming up. It may seem devastating, but that experienced realtor is not going to throw up their hands. They're going to be your champion, and they're going to be the person with their experience and their maturity who are going to help guide you through that transaction. And most importantly, this person that you want representing you should always be available to take your calls, your texts, and your emails. So I actually at this point we're going to take a break to see if anybody has any questions, and we'll bring Bridget back on to see if she has any questions for us.
Yep. All right, welcome back. Got a couple questions here for you, Robin. What type of credit score do you need to purchase a home?
Well, the minimum credit score that Valley Strong requires, and when I talk about credit score, it's going to be that representative credit score that, I was talking about. We use the 3 scores, or we use the lower of the 2. Minimum credit score is 620.
Okay, thank you. Question. All right, got a couple more questions here. I may have missed the type of loans. Are there any first-time homebuyer loans that you have, or what type of products do you offer?
Okay, at this time, it's interesting. I'm going to say this, just say it right now. Technically, there are no first-time homebuyer programs. It's a tool. It's a media thing to get you to go to a financial institution. There are options for down payment assistance. At this time, we are not offering any FHA or VA financing, but we have other low down payment options. And so those are things that when you meet with the loan officer, they're going to talk to you about what all of those options are that we have with all the different programs that we have to offer you. And we do have some, we're working on right now, some other programs that we are going to offer very low or no down payment options. Now, what you've heard, and there used to be years ago, first-time homebuyer programs. There were income restrictions. You could not have owned another home before. They were down payment assistance. Those loans also came with, nothing's free. They also came with a higher interest rate, and you had to pay back the down payment assistance. So I hope
Most of the properties with those programs, when those were around, as Robin said, they're no longer around. But when they were, most of the properties that qualified for that were in areas that were being revitalized, and there were specific parts of town where those loans were only available. So you didn't have a broad selection of properties. But once again, the programs just don't exist anymore. The first time home buyer is a thing of the past.
Okay, I've got a few more questions for you all. How long is the home application good for?
It is, so your pre-approval application is actually good for 60 days. And I say that because during this pandemic, we have regulations have tightened down a little bit just because of the big ripple effect of the pandemic. There are people that maybe they might be subject to layoff or furlough as a result of maybe some struggles that their employer is going through. So we want to make sure that we have timely information so that when you're making that offer, we know that our representation to the realtors and the seller is very solid.
All right, a couple more questions for you. Who actually handles the appraisal?
Who handles the appraisal? What we do as a lender is we order the appraisal through what's called an appraisal management company. There are rules and regulations, federal and state regulations that are in place right now as a result of the financial crisis back in the later 2000s that prohibit a lender from going to a specific appraiser, because what used to happen in the past, so I have to go to an appraisal management company and order the appraisal through them. And then what they do is they have a panel of appraisers, but I cannot choose who that appraiser is, because if I have conversation with them, that could be undue influence on the report. And we always want to make sure that the reports are fair and are a good and unbiased representation. Thank you.
All right, so I have 3 more questions for you, and then we can move on. Okay. Do you have to pay PMI or when you put 20% down?
No, that's actually, PMI is private mortgage insurance. What that is called a foreclosure insurance. And if you are putting less than 20% down in your down payment, that foreclosure insurance is there to, and basically what that equates to us as a lender is the smaller the down payment you make, the riskier the loan is for us. So this foreclosure insurance, called PMI, private mortgage insurance, is actually in place because of a higher risk loan. Should you go into foreclosure, that insurance pays off our loan that we have made to you.
All right, awesome. Okay, one other question here. What realty company does Craig McMahon work for?
Sweet.
I work
let him say that.
I work for McMahon Real Estate Company. We're a local business. My father started in 1969. I've been business partners with him since the very early 90s. And we're a small company, and just our business is ran by the golden rule of we treat people the way we would want to be treated in a transaction. So it's worked for many years, and we're very proud of our reputation and name in town.
Awesome. All right, last question. What are current interest rates?
Well, they're wonderful right now, and thank you for asking that question, because actually it's a really a timely question. So one of the things that's coming up right now, and I'm going to talk a little bit not too fast, but Craig's got a lot of information that's coming up here, and I know we're getting kind of short on time. It's interesting. I noticed over the last week or so, the media is whispering, rates are going up, rates are going up, rates are going up. Actually, and it's so it's frustrating for me because they may go up a little bit this year, but in reality, they're still going to be very, very affordable. By going up, what that might mean is a quarter or a 0.5%. Currently today with Valley Strong Credit Union, a 30-year fixed rate mortgage is at 2.875%. And if you have a shorter term, we have even lower rates than that. So I want to go ahead and move on to Craig's segment of this. Thank you all for your questions, and we'll have time for them at the end as well. Thank you. All right, Craig.
Okay. Right here, after we go through that pre-approval process and it's time to start getting out and taking a look at houses, seeing what the market has out there for you. I always ask my clients to sit down and before even meeting with me for the very first time, we talk on the phone and cover the items that are most important for them. And when it comes down to, as Robin noted earlier, whether it's, proximity to work, schools for the kids, future plans for the family, and then obviously just true market values and best place to be for the money. I'm often asked, Craig, this is what I qualify for. We don't have children, but we want the most solid place to invest our money. Because not only is this, you're not only looking for a place to live, but this is a long-term investment. And going back to what Robin spoke to in choosing a realtor, is you want someone that lives and breathes this business 7 days a week, 24 hours a day. This is not a business you can be in part-time. This is something that to give your clients the value that everybody's looking for that's purchasing a home. You've got to have someone that knows what's happening in our local market. And again, it's ever changing. And you want someone that is on top of their game. So what does the agent look for? Obviously you have your wants and needs for a home, from square footage, bedrooms, lot size. Does it have a pool? Does it not have a pool? So one of the things that I do for my clients differently than most realtors out there is I prepare, we break this down. We go look at 10 houses, however many houses, and we're able to finally break it down into a list of your final 3, 4, or 5 homes, and which one do you want to buy. And I prepare what's called a comparative market analysis, where I do as tight of radius as I possibly can around that subject property of interest to come up with a market value, taking everything into consideration, from any upgrades in the home, any deferred maintenance or work the home might need, from a roof to paint job, flooring, whatever it is. We break the property down and are able to come up with a value, a market value. And sometimes, clients will ask, well, what do we offer? Well, you can't just come up with a number from the sky. And in the negotiation process, when an offer is presented, I'm able to show the other side, the broker representing that seller, where this offer and this value comes from, and based on not only what's happening in the neighborhood, but work that might be required, and even asking the seller to participate and pay some, if not all, of the buyer's closing costs. That's another thing where we're able to negotiate to make things done. But everything is based around that comparative market analysis, which, as Robin noted earlier, is basically the exact same thing that an appraiser does. I have access to all of the same resources that the appraisers do to come up with that market value, and just put that information in printed form in the hands of my clients for them to make an educated decision on what they want to do. And we're able to see where the market was, where the market is, and where the market's going. And that's what has just been a great success for my business, is putting that information in my clients' hands so that they're making again, they're making an educated decision. And then just again, in looking at these properties, not just the value, but the maintenance and structural concerns. The appraisers, there's very strict guidelines that a property has to meet in order for the bank, like Valley Strong or any company, to give us a loan. And they're very strict guidelines: the heating, air conditioning, roof, swimming pools have to be functioning. You can't have an empty swimming pool with most forms of financing. There is financing in place where you can do that, but it's kind of a as is type financing, which most people that are just getting started, they're not looking for that kind of financing. But can we go to the next slide? So after we've identified the properties, you've reviewed the CMAs, you say, Craig, we want to go for 123 Main Street. Let's get after it. Let's make it happen. We come up based off that CMA on what we're going to make the offer for, what that price is going to be. Reach out to Robin and her staff, tell them I need an approval letter at this price point. They always have really quick turnaround for me, and I'll email me a letter. We would write the offer to purchase the property. My offers always are contingent upon numerous things, such as inspection period. The standard inspection period in a California purchase agreement is 17 days. It is negotiable. It can be made 5 days, 10 days, but the standard form is 17 days for inspections, meaning the buyer can do any inspections on the property that they want to do at their expense, from termite inspections, roof inspections. I always recommend my clients get a home inspection, which is a fantastic value, where they check all sources of the property, from electrical, plumbing, the roof, climate areas I would never too chicken to go into attics and crawl spaces under houses, and they look at absolutely everything and give you a very detailed inspection report that is helpful in after the offer has been written and submitted. But those inspections are very, very important. So the contingencies are always in place to protect you as the buyer, to make sure that this property is going to meet the condition that you would expect it to prior to closing. The closing costs and concessions from seller. What that is are we going to ask the seller to participate or help us with closing costs? We've had great success by understanding and knowing, after studying the CMAs, where the market's at, and being able to get our buyers' closing costs, the seller to participate and help pay some of those closing costs, so that the buyer's not required to come in with the full amount on their own. And we always, the offers aren't good indefinitely. The offers are presented to the seller's agent or the listing agent. The standard time frame that an offer is good is 3 days. Sometimes, if you make an offer on a Friday or a Thursday, you don't want it to go into the weekend. So I sometimes am very aggressive with my expirations of the offers, and might give them 24 hours, might give them 4 hours. Just depends on the situation and the strength of the buyer and the property itself. So it's very often times in this market, it's extremely competitive, and there be multiple offers. You could be one of 10, 12 or more offers on a property, and just allowing it to just be good indefinitely is not anything I recommend. With that approval letter, you're already ahead of 75% of the other buyers out there with that approval letter in hand. And I put a lot of pressure on the selling agent side to respond and accept that offer, because with that approval letter, they know that the transaction is going to close escrow, which is the ultimate goal for everyone involved. But the sellers, they most definitely, they love to hear that approval letter is in place. And I love to explain to them that my famous line is that the pre-qual letters aren't worth the paper they're written on. So that conversation happens every time an offer is presented. And then after the offer is submitted, continue to follow up with the listing agent and representing the seller to know one of multiple things that happens once an offer is submitted. Ultimately, the goal is for it to be accepted the way that the offer was written. Oftentimes, the sellers will say, we like the offer, but we'll only accept the offer with these changes, and that's called a counter offer. And then it can go back and forth many times. But you can get a counter offer from the seller, and then we can say, well, we like the counter offer with these changes, and we can counter their counter, and it can go back and forth and start splitting hairs until you can come to an agreement. And again, this is where Robin mentioned that you most definitely want an agent that is extremely experienced in this negotiation, that knows how to get you as the buyer what you're looking for. And you don't want to give anything away. And then the other thing that can happen when an offer is written is the offer be declined, or even oftentimes we get rejection of an offer. So that does happen at times. One of the things that is getting frustrating for buyers here locally right now is there's a lot of people moving to Bakersfield from the Bay Area, Los Angeles, and they bring in substantial amounts of cash with them. And there's a lot of transactions happening right now that are cash transactions. So when you make an offer and you're one of multiple offers, and there be a cash offer that comes in, oftentimes those cash offers will take precedence over a finance deal. But what I tell my clients and my sellers, or if I have a client that has made an offer that is going to be financed, where there's going to be an appraisal and inspections, those cash offers, if they can't close them in a matter of days, that loan is worth the same thing, and turns that to that seller, that closing statement, that check in that seller's hand at the end of the day is the same thing, whether it's a cash transaction or not. So the strength of the buyer is so very important. And with investors or people paying cash, oftentimes they're making multiple offers all over town. So they could be, they're only going to buy one house, but they got 3 or 4 offers out there. So, again, going back to the very, very beginning of our presentation tonight, the approval letter is just absolutely the most important thing to have in place. Your negotiation will go nowhere in purchasing a home without that letter and Valley Strong standing behind you in getting it accepted. Often happens all the time where realtors, sometimes even sellers, will call Robin and her staff to check the strength of our buyer, to verify and confirm, is it true, really, these things have been done? You've seen the credit report, you've seen pay stubs, bank statements, and the answer is always yes, because a letter is not submitted unless those items have been taken care of. So on to the next slide. And then we get the great news, so I mentioned earlier of all the people that you might know that are struggling, not getting their offers accepted. They were probably competing with myself and Valley Strong, and our offer got accepted and others aren't, because the unfortunate part when there's multiple offers is there's only one winner, only one family gets the home, and it's no fun being on and representing sellers to make those calls to let other families know that their offer wasn't accepted. But once the offer is accepted, then the real work begins. I submit the fully executed purchase contract to Valley Strong so they can begin the process on the financing side of things, order the appraisal, which again is just a very detailed example of the CMA that you already have in hand. An escrow is opened where they're a neutral third party. Their job is to get up the information from the seller, the information from the buyer. They do all of the background and title check on the subject property to be sure there aren't any liens or loans against the property, that when you buy the house, you own the house. We're not buying anyone's debt. So in our offer, when we're negotiating, we will also ask the seller to purchase the buyer a title policy. And that's exactly what that is that guarantees the buyer clear title of the property. There aren't going to be any mechanics liens or any debt on the property other than the loan that you're obtaining from the bank. The loan application is processed. They'll update everything. They'll want to see some updated pay stubs just to verify and back up what was done in the very beginning when the approval was submitted. So they'll verify all those final documents. They'll draw the closing documents for you to sign. The inspection process has expired. We've seen all the reviewed and gone through all of the inspections, made sure everything meets your approval, and all contract conditions are completed. So there's be an appraisal contingency, inspection contingencies, loan contingency. So it's just a process that we get through from start to finish during that escrow period. A standard escrow time, start to finish, you usually run anywhere from 30 to 45 days. Sometimes they take a little bit longer, but we've had great success in closing most of our transactions in that 30 to 45 day time frame. Valley Strong sends the final loan documents to escrow, and escrow, myself, will give you a call and tell you to be sure you don't forget your thumb, because you're going to need your thumbprint and your driver's license to sign those loan docs. Everything has to be notarized, so they'll take your thumbprint and you'll sign your name a lot of times for the loan. And it's an exciting time with that. At that point in the transaction, we're really getting to a place where there's really not anything left to do other than, we're days away from closing the escrow at that time. Escrow reviews all of the final numbers and let us know what that final cost to close will be. Valley Strong does a phenomenal job of getting those numbers put in place where you'll know those numbers long before you ever even go in. All escrow is going to do is verify what you already know with the money that it's going to cost you to buy the home, from the down payment and closing costs and so on. So those documents are signed and returned back to Valley Strong. I set up or the realtor sets up the final inspection and walkthrough. Those are usually done within 5 days, 3 to 5 days of the closing of escrow. And the purpose of that inspection is to make sure that the property is in the same condition it was in when the offer was written. So you want to be sure somebody didn't come take all the mini blinds out and take the dishwasher, things like that. Or if there was work that was required to be done prior to the close of escrow, that indeed that work has been done. So we do that final walkthrough. We physically walk through the home and verify everything meets the buyer's acceptance, and we sign that off. And I authorize, after getting direction from the buyers that they're ready to close the transaction, everything meets their satisfaction. And Valley Strong Credit Union funds the loan, where they send the money from the bank to the escrow company. And I'm notified by escrow that the money has been received. And the very last thing that happens is the deed that is also signed when you go sign those loan docs is sent to the county recorder's office, and that notification comes that the deed has been recorded in your name. And that is the process at the end when you hear the escrow is closed. That's what has happened, where that deed has been recorded in the new owner's name. And then the funnest part of the job for me is delivering keys. But we go to the next slide. So yeah, that is the process, start to finish, in a very summarized nutshell. But if anybody has any questions for myself, feel free to give me a call, and I'd be happy to help anybody any way that I can.
Yeah, and can't stress enough how important it is to reach out to Craig. His expertise has helped many of our members. He's a great referral source for us. We refer our members to him, and always top-notch representation. So we're really proud to be a partner with Craig in our transactions. So Bridget, I know we're running over time just a little bit here. Do we have maybe just a couple of questions?
You do. You have about 5 of them. Let me start with the first one. My husband just got a new job as a truck driver, and how long should we wait to be pre-qualified?
Well, it depends on how long he's been driving. If he is brand new to the driving industry, we're good. It goes back to that ability to repay, that continuity or stability of your income. Pardon me. So we're going to want to see it. And again, with truck drivers, it kind of depends on how are they getting paid by the load? Are they, it depends on what that type of income is. At that point, what I would do is call into the home loan center, get an appointment, a telephone appointment with a loan officer, and talk through those items and be more specific with the loan officer. And then they'll give you a better idea of how long. There may be other things that maybe won't need that long of a period, or there may be, based on the type of pay that comes with truck driving, might need to see a longer term of income stability.
Okay, great. Thanks, Robin. All right, next question. Does a credit union offer better options or offers rather than a regular bank? Of course they do.
I'd like to add something to that, because I get a lot of questions when it comes to that, and work, with other mortgage companies that have clients that are sent my way. And one thing I can say about Valley Strong and the credit union is their interest rates, their fees are by far not. There's no comparison in town to what they're offering there. Their staff is not on a commission basis where they're being paid per deal. So any overage they can charge you goes in their pocket, to where most every other mortgage company in town, they're looking to upsell, and the rates are always higher because that's how they make their money. So, the mortgage and home loan center for Valley Strong is just such an amazing tool for the members, because the fees are so low in comparison to the competition that's out there. So, I've had many clients come to me and say, Craig, can we do better somewhere else? We went to our friend or someone that was referred to us, and send them to Valley Strong, and without any exaggeration, 99% of the time they end up getting their home loan with Valley Strong.
And actually, and thank you for saying that, Craig. I kind of giggled. Of course, we're the best. But one of the things that I wanted to also offer to you, our participants here, that you have just spent this last hour with us, if you're doing because you have joined us in this workshop, if you're working with us and you have a purchase transaction, we will give you 0.25% lower on your interest rate. I just want you to understand that. So when I said earlier, my rates today are 2.875. If you're ready to go buy a home and you get you get in contract, I'm going to offer you 2.625, and that's
unbelievable.
That's to you.
Yeah, that's fantastic.
All right. Well, we have a couple more questions in the queue, and then we'll go ahead and wrap it up, and the other questions we'll just answer via email. So please make sure you complete your information on the survey. So the last question is, who would you prefer the client meet with first, the realtor or with the mortgage bank?
Mortgage, the lender.
The lender. Okay.
Yeah, I only thing I can add to that is any questions that a potential home buyer may have that had interest in talking to me prior to. I have no problem in answering any of those questions, but in terms of getting that process started and knowing what you can do is more important than phase 2 is seeing what's out there.
All right. Wow. Well, that was awesome, and some really great questions out there. Thanks, Robin and Craig. And again, I'm just going to wrap it up. We just want to thank you for joining us this evening. We hope you enjoyed all the content and that you leave feeling prepared and ready to go out in the world and buy your dream home. After we end the meeting, you'll be presented with a link to take a short survey regarding today's webinar. This is where you can ask additional questions if you feel your question was not answered in this presentation. Just be sure to include your contact information so someone can reach out to you. So on behalf of Robin Potter, Director of Valley Strong Home Loan Center, and Craig McMahon, Senior with McMahon Real Estate, and myself, we would like to thank you and have a great night.